Yo, how's everybody doing? We got a banging stream for you guys tonight. I got Karim back on the mic once again to give you guys a bullish macro outlook for the next 24 months. Who's ready to make some money? So before we get into the macro and I bring Karim up, and I did shoot an invite to Crispy Man as well, so that we here giving us some good data analytics, sentiment checks, readings on the markets. Those guys are coming in a minute. Before I got going on that, I wanted to bring up an important, exciting announcement, which is that the 2 Solid pool is now live on the Fux.io exchange, and the 2 Fux ecosystem is now rolling out, and 2 Fux is trading, and it just did a 110%, 116% run before it just made a short pullback here. So I'm going to pull that up for a second. We could talk briefly about that. I think that, just finding out about this protocol 2 Fux just a couple weeks ago, like I would say it's like 3.5 weeks ago, from going from like not even knowing what the heck it was to basically like converted. Like I think that the infrastructure play here is so big because it gives the strong communities a way to leverage their power in the ecosystem to drive APRs to pools that will reward their holders. So, for example, here's the price chart of 2FUX right now. Think of 2FUX as the incentive token for the FUX exchange. So 9inch has BBC. It did a 27x against Pulse. Inc did a 22x against Pulse. Think of 2FUX as the incentive token for the FUX protocol that has the same potential and if not more. And the reason is because this coin also comes with governance capabilities. So there's got an extra utility there. And in order to use that utility, you actually have to lock it up for 16 weeks to get that voting power to use that directed energy weapon at the pools of your choosing. And so, you know, clearly the solid index guys are pretty serious about driving value to their coins. And so I got for you here that page. This solid index right now is paying the 2 solid pool is paying between 300 and 680% APR. That's crazy. And now, so that's not a small pool either. That's got $207,000 of value in it. So you got to think that even if this gets to $1 million pool, this is still going to be over triple digit APR. So like the goal here is to leave a lot of meat on the bone and derive a lot of that APR value into this pool to give people an opportunity to play a game where they can actually, you know, get ahead, basically, to outpace something that the Inc farms are giving you or the 9inch farms are giving you, a place to go where you can get more of the coins you love by leveraging the power of 2FUX. And we've set this, what we call the greatest mousetrap ever. We've set this up working together with the founder, Yellow Cake and Fast Abdul. We came up with this distribution where it's like 33% of the pool is the incentive token, or it's the 2FUX token. So not only do you have to do big whales have to lock up their 2FUX in order to increase yields for their users, but they also need it, and we all need it to go into this pool. So clearly, if we all locked up our coins, the whales are locking them up to derive energy there to make high APRs to get you all to buy more of the solid coins to drive. Like then we're all going to need more of this 2FUX anyway. So what that's resulting in is, you know, all this hype and FOMO around it is resulting in this, which is the 2FUX price chart is up 100% in the last day. So breaking news, guys. The mousetrap is working and it's paying to get involved. So that's very cool. So thank you for listening to my little hype segment. I'm super excited about this, and I think the potential here is limitless, and I can't wait to have Fast Abdul and Yellow Cake on in the future here to talk a little more about it. Maybe we'll come back and revisit this with Karim and Crispy toward the end of the segment. So without further ado, I'm going to bring up Karim the Dream. How you doing, brother?
Bang, bang. I'm back, chilling. Shout out to the chat. Shout out to everything. Shout out to Axis. Shout out to all my Hexicans, Pulsicans out there. I'm going to say this once because I'm in the good mood, but this is important to say. Shout out to everybody giving some value to Pulse Chain and some utility, especially if you're not out there scamming people, but genuinely trying to add value. I got respect for you. Whether I may or may not buy your coin, I got respect for you. So take that to heart because I always speak real shit. So respectfully, I wanted to start by saying that.
Thank you. Yeah, I mean, we're like, in the case of what we're building in our little corner of Pulse Chain is just trying to add value for users, right? And an incredible price performance. And that's been the MO. So from the beginning, not the main thing though. The main thing was always been education, right? So
that's why I always liked you, because you're genuinely trying to help people, and you're actually humble. It's not a little corner; it's a big corner. But more importantly, I don't know if you remember, like over a year ago or 2 years ago, when you told me you're about to come up with a coin. Do you remember the few advice that I gave you?
You've given a lot of wise words over the years,
but you did most of them. What I told you was very, very simple. It's like, hey, right? Obviously, that common sense, don't scam people, but more importantly, just make sure whatever vision that you have, you know, because sometimes you launch something, scammer comes to take over your coin. You think you're in control, but then you don't. And always make sure you add value and get more than what you quote unquote trying to extract out of it. And I've seen you do that. So I want to give you props for that, you know, because a lot of people is just like, you know, either pump and dump, get rich quick scheme, and then just like, use the reputation, mess things up, and then bounce. So, and you still been here, and I've been watching from a distance, but I've been watching, and I want to give you props for that.
Amazing. Hey, we're also joined by Crispy Man.
What's up, Crispy? Long time no see, my brother. Oh my God, it's gonna be a good conversation.
Been a while, baby.
I know I missed you. I know it's just, I'm no longer on, Coin Gang, you know why, but I definitely miss you. So, but who knows? Who knows? I've been making some concessions the last couple of months. I've been talking to my best friend and some friends around and see what I should do or shouldn't do. But I got some secret sauce coming around. So, and maybe this stream will fire me up. It's like, I feel like a 2020 all over again. So this is going to be good.
Oh, dude.
All right, people in the chat, don't get too excited, but I got something coming for you guys. So it's just about sharing the love, sharing the truth. And to be honest with you guys, last year, I was like thinking about this, like, besides close friends, because, they got my number. So there's nothing you can do about that. But I really wanted to test myself and test people. Like, do people really, really listen to the teaching? Do they really, really apply, right? What do I always say, right? First, you listen. Second, right, you understand. Third, you internalize. In other words, you go and you actually take actions. Not just people just listening and then every week, like, where are we? It's like you almost got to give reassurance every week. I'm like, bro, we talked about this. Like, you know what the game plan is. Just do and stay the course. So I really wanted to test who's actually here for the right reasons. And a lot of you out there, you passed the test sometime, OG or not, whether you've been here for a year and a half or 3 years or 4 years, like some people, to me, and you're still here, besides all the fun, respect. Your boy's back, and primarily I'm here for you guys. So we're going to talk about some great stuff, but I just want to give you guys props, especially people in the chat. So if you've been here long enough, and you're still here and you still believe, you didn't wait for me or Richard or whoever to come and give you the secret to be like, oh my God, do you understand why you got involved? We got treats for you.
Crispy, are you feeling
Scooby treats?
This is a direct question for Crispy. Are you feeling those 2020 DeFi summer vibes in the air? It's not a trick question.
Can I be
I'm
like,
just asking for your opinion.
Can I be like super honest?
Yeah. Please, always.
We always come from a place of honesty.
I'm feeling the pre-April 2020 feelings right at the moment, but I've learned enough and seen enough that I'm anticipating, and I don't. That's can't really depend on anything else happening, right? But the cycle's moving along like cycles move, and this is the equivalent of May of 2020. And yeah, DeFi summer came. I didn't even know what the hell DeFi was when it happened. I mean, I was participating, but I didn't understand. I thought it was funny that all these guys were chasing Sushi Swap and all this stuff, man. I didn't understand how important it was. It was all kind of new, right? I mean, damn, we only had a couple months we could even use anything like like MetaMask, So
absolutely. Oh, I got receipts on that. Not only I believe it, but quick maths. I got receipts for you guys. Whenever we're ready, it's gonna be a fire hose today because it's been a while. So there's a lot of.
Hey, don't get me started on this whole t-shirt thing, man. I'll talk to you about some t-shirts, and I get all animated and whatnot because I'm streaming every week talking about the T-share rate and T-shares and dude, listen, I understand because I'm here with everybody else and it feels like one thing, but we're in the middle of something. It's like being on a roller coaster and saying you understand what the ride's like and you haven't even finished yet. Wow. And so you're looking at this and I hear all the FUD and I get it and staking's out of style. Nobody was going to do that stuff anymore. And I'm looking at my estimates and I go, well, if people acted like they did in the past, we're going to have 4 million T-shares, right? In 15 years. But people aren't acting like they did in the past. They're going the other direction every day, right? And so then I look.
Which has actually created something even more crazy that's been happening. So, cat's out of bag. I can't hold it so long. But basically, I've been watching, not just the T-shirt, but I've been watching the total payout per day. And I think we have reached what's called a climax return. In other words, it's like the T-shirt acceleration combined with the fact that a lot of people has, exited out of the pool with the deflation action on T-share has actually created something that I didn't expect until most likely year 7 or 8. And
Yeah,
it's
dude.
happened.
Nobody's seeing this, man. I keep talking about it. Yeah.
And the way I want to break it down for people who are new, Hex clip, if you're watching, you definitely want to clip this. This is really cool. And Axis, if you don't mind, I want to share my screen for a little bit.
Yeah, I can actually pull up the T-share chart.
Perfect.
I got all this stuff ready.
Perfect. I love you. Just go to even just like regular, like, you know,
which one is it?
Go to HEX.com. I just want to show people like the day payout total.
Daily
because
payout.
What's been happening is, like I've been preaching for many years, T-share acceleration is a real thing. You know, the deflationary action on total number of T-share has been tremendously accelerating. So for new people, what that means is last year, every about 3 months-ish, 3 months or so, we lose about 100,000 T-share in the total count, right? We crossed below 10 million and then we started going, 9.9, 9.8, 9.7, and roughly about every 3 months. Then literally once we crossed 2024, that same 100,000 every 3 months literally doubled. So in other words, it started doing 200,000 or 250,000 T-share less every 3 months. So it's actually getting deflationary even faster. Obviously, it's very good for people who are still in the pool. But now on top of that, which add to the real deflationary action that the T-share can do, because now obviously HEX already inflate, is we reach a plateau where we got close to 68 million HEX pay per day, the daily payout total. And now it's starting to reverse. I've been watching it for almost about a year now, because since the very beginning, I'm going to say very simple for the new people, the day payout, which is the number of HEX being paid every day, thanks to the inflation, the 369, has always increased. It started from 0, then a lot of millions, and Axis, maybe you can help me with the visual aid. Can you go to, even if you just go to HEX.com, and I want people to see this. This is very important because this is what also generate the APY, but generate also the payout. Although HEX is inflationary, what I'm saying is it's getting disinflationary. In other words, is that the inflation is getting less and less. This is something I expected to happen by year 7 or 8 because T-share acceleration gets faster than the number of coin being generated by the 369. So in other words, if we deflate faster than 369, the day payout, which is supposed to always go up, will start to go down, which is insane. So scroll down and then get the full data daily. And for the new people watching, scroll all the way down. I'm going to show like a quick little historic for people. So in the very, very beginning, day 25 or below, it was almost 0, then like 2-3 million. And then we're going to skip the days when there's like obviously crazy emergency end stakes. So there's going to be some outliers here and there. But you can clearly see what it was very, very low, 2-3 million, 5.
Yeah,
and
these
then
payout per T-shares is what he's looking at. Hold on the second.
Exactly.
So this column here shows you how much HEX you got per day per T-share.
Okay.
So you can see in the beginning that they were 0, 0, 1, 1, 1, 1.2, 1.3, 2, 2.3, 3, 6, and then it got a little more volatile in here. This was probably when Knightley was emptying his bags.
Yeah, right. But you can see the steady rise, right? Yeah. Now, for people who are new, the steady rise because the day payout, thanks to the 369 inflation, constantly goes up. And as it go up, what's happening is that the payout per T-share will slightly increase over time because, again, more is being paid thanks to the inflation to quote-unquote less and less people. But now what's happening, which is even crazy, is that the day payout, which is the first column axis, please go back there, which started from like literally almost 0, right? Then you go to 3 million. That one always usually goes up, right? Now watch this. Go all the way down slowly as people can see how it grows to like 10, 20, 30. It got all the way to like about 68 million, go all the way down. I think right around like 1,300 days, more or less. And by the way, this is insane for people to watch. This is how crazy it is.
Just to recap what Karim's saying, he's saying the global payout. This is how many HEX is getting distributed to the staker class every day. There was this 129 day here, but that was probably a massive EES, right?
Exactly.
Okay.
And those payout comes because stakes are ending, but also because T-shares are involved. So in other words, people are getting paid, and at the same time, every now and then people are emergency and stake. But now you get to see how it goes. Keep going. 63 million.
Starting to come down.
Yep. Because after big payday, for those who are new, after big payday, there's less volatility. The game is set, and now it's just like slow and steady 3.69. So it's going up, but it's going up like a grind, right? But then what you guys are going to start seeing after like about 1,300 days, because again, it's 3.69, so it's a very, very slow amount. The way those payouts also happen is based on the T-share in the system. So the T-share was supposed to gradually decrease. In other words, as they were gradually decreased, the day payout should constantly go up because there's always going to be more to be paid, right? Thanks to the system and the inflation than the T-share being involved, because you can't pay something if there's no T-shares involved. I'm going to say it again very slow. I don't want to lose anybody. You can't pay a payout if there is not a T-shirt, right? So in other words, it's like a certificate of deposit. I can't pay something if there's no deposit, aka the T-shirt. And if there's no T-shirt, that means people are either not staking enough, or people are emergency end staking or leaving the system faster than the inflation. So something that was constantly growing, you guys saw it from the beginning, literally 2-3 million, got to all the way to 68 million. And now not only it's grinding, but now it's starting to go backwards. And the reason why I'm saying that is because some of the people are saying, oh, HEX got too much inflation and da-da-da-da-da. But no, it's just enough. The problem is people don't understand how the T-share mechanism works. And then the deflationary action, I was expecting that to happen by year 7 or 8 because the T-share price becomes so expensive, either due to price or a lot of people leaving the system. That what end up happening is less and less people are in the system. Yes, those specific people are getting more payout per T-share. Like I'm still compounding 70% APY. But what's happening is that because there is lesser T-share in the system at a faster rate than 3.69, what's happening is now even the global inflation paid per day is starting to literally grind to a halt, almost like plateau, about 69 million. And now it's starting to go backwards. Again, the same thing actually started from 0, went all the way quickly, right, to 20 million because, the first 365 days, right, was a setup. Then after that, it continued to grind up. But now it's starting to go the other way.
Yeah, hold on. Crispy, you got to drop this because I'm pretty sure. Let me just segue into what, Crispy, you're about to say, which I think is the amount of HEX getting burned is actually reducing the total supply.
Exactly. Bang, bang, bang. That was the next point, which is now because
Crispy, let Crispy go for a second. Yeah.
Well, I think you're onto something with the volatility of the payouts, but remember, it is always based on ever minted HEX.
Yes.
I think what we're seeing, particularly when you're looking at Ethereum, is that so many people emergency end staked that it's flattened out the curve because not as many people available to do it. And actually do the emergency end stakes. Now we have these days where like hundreds, get well, you've seen the recent payout.
Yeah, it gets a kickstart.
Because that payout number, remember, it's always layered in with the others. If you go to the pulse chain charts, axis, you can actually pull up. You can pull up one that's titled the base base payout, HEX payout, and it'll actually plot it because I cleared the data. So go to the search and just go to the search. Say
this is cool. So guys, if you go sign up for hexfire.io and you go under exclusive member data, you can actually search here in the nice little convenient search box and get
great site, by the way. Highly recommend it.
Right. Yeah, type in pulse chain right there.
Pulse chain.
Yeah, I'm still working on all this stuff. And hit pulse chain charts.
Yep.
Yeah, this is my big collection. Okay. And if you go to when you open it up, you go to base.
Yeah, give me a second. I gotta log in. I don't know why I didn't do this ahead of schedule.
I have it on mine if you want me to share it. I can show it.
Yeah, no.
It's all good in the hood.
Yeah. Oh, Karim. So there's another part of this we got to get into too, man, that people are missing. As I was telling you, that based on past behavior, which is like conglomerate of everything, I would expect there to be 4 million T-shares in the future. Right now, there's only 17,000 on the pulse chain. So we got a huge gap between the two. And how do you get to 4 million from 17,000? And so the question is, in my mind, is how are we going to get there? If people aren't going to go in, then we're not going to. We're going to have this huge gap, which is just going to increase payouts. For per T-share.
Yeah, because also what's happening is that the T-share acceleration is doing what it's doing with the ratcheting, but now on top of that, that's what I said earlier about I expected it by year 7, because what's happening is very simple, is that because it's about rate of change, right? Because the day payout mathematically should always goes up no matter what, because it's 3.69 forever. But then what is happening is getting a little flat now because people are getting out of the system, so to speak, or less T-shares getting out of the system at a faster rate, because it's about rate of change, than the 3.69 is adding. The same way back in the day was moving gradually slow, and then big payday came in and give it a big boost, right? And then kickstart the acceleration of the payout, because like you said, it's forever HEX minted. So it has to come to circulation. Once it comes in, it's calculated into the global supply. 3.69 gets added to it.
Remind me which one I'm looking for here. Sorry.
Pulse chain.
Yeah.
Charts.
Yeah. It's on. So I'm here. PLS.
So for people watching,
I'm in the back end.
The TDLDR, right, too long, is that the massive exodus that I was expecting to happen, some of it by year 7, people are hitting the 50%, right? It started to happen 2-3 years in advance. I mean, it's crazy bullish. I mean, these days we're getting insane payout. But what I love about this is like it's happening faster than even I anticipated. Because again, people think we're crazy. We lock in stuff for 15 years. Like, no, like this is super bullish because it's happening faster than I anticipated. And this is what I truly believe what Richard means by, getting off the weekends. People think it just means somebody that don't have a lot of coin. No, weekend could even be somebody that's, day one or OG with a lot of coin, but don't understand what he owns and just gets flushed out. Because that, to me, adds to the scarcity. Because now it makes it to the point where more and more coins are sitting onto the diamond hands, the people that have long-term stakes, the people that really understand the value. And on top of that, less and less are being paid to those who have even less T-shares. Because if the global payout is being stalled, for lack of word, because it will never go backwards, obviously. But if it's being stalled because people are literally, T-shares are exiting faster than the 3.69 can add to it, what ends up happening is it adds to the disinflationary aspect. So now what's happening is if we stick around that 66 to 68 million payout per day HEX and don't go to, let's say, 100 million because there's not enough T-share to justify that, what ends up happening is what stay there while the T-shares are being like reduced, the total amount, more and more just end up into the long-term hands than the short-term hand, which add to the scarcity of HEX. I know that was a mouthful. Crips, maybe you're gonna have me.
I'm with you. Hey, so what I threw up here on the screen, what Axis was searching for, and I sent you that link in the private Axis. It was just trying to track the two systems and what that base payout is. And so we're gonna watch this as it goes along. So I mean, the smart contract's been doing what it was planning to do, right? I mean, it does. But this does not include penalties.
Yes.
Now, penalties on average have gone up over the last 6 months or so, but it's still around 4 million a day on both chains.
Yes.
Something right around those numbers. That's the average. So
yeah, this is a little bit more on ETH, obviously, but it's about the same average. And the same thing with the share rate. It's like ETH has a little bit of lead-away, but it's about the same.
Well, you know what happened to me is, so this is our this is my forecast, and forecasts are meant to be wrong, right? So it could be this is the base. But if I go look at the payout per T-share, base payout per T-share, I had to change my plans, right? So this is what you're talking about, is this escalation here at the end, and how it's just like shooting up in combination with the other data. So I didn't expect that we would be at 7 on HEX for another month or so, maybe 6, maybe a few more months. But look at that. So the Ethereum side, you can see it going up pretty fast. Now, the other thing I think you're probably observing too is a T-share on Ethereum is not a T-share on HEX. Yes, technically same definition, but when we're seeing T-shares on Ethereum, those are long-term stakes because either people couldn't end or they didn't end, or they're just the leftover long stakes. The T-shares on the Pulse chain side, We can see it in the numbers. They're just like, whoosh, well, they're just washing out. I mean,
Yeah.
you go look at
Because the fee is cheaper, so it's easy to end stake and restake, so to speak. You know what I mean?
yeah,
But
but they're
unfortunately,
losing their power all the time.
exactly. But the thing also is like if you're big enough wallet and you have the funds, you will end those stakes. So it's like it creates a delay and then it catches up because the big wallet will come in and reset it. Or like sadly we heard about the hack, right? Guy got hacked, the thing bleed on Ethereum first, and then what is it? A couple weeks later, then the guy figured out about Pulse Chain, and that thing got popped out of there too. The time when we got that 66, what was it? Like 66 or 66. I mean, it was stupid. I made like 400% in one day. I mean, APY. It's like Axis is almost like those fools that you're talking about. But I mean, it's stupid. It's literally free money at this point. You know what I mean? But this is important for people watching. Please pay attention because this is really the key. This is where it gets really, really interesting.
I'm curious with this slide up there, Karim, like how do you as the dream account holder, right?
Yes.
How are you approaching this scenario with the T-share payouts being so much heavier on the ETH side versus the Pulse side? What is going through your head seeing that, and how do you expect to be playing that forward like and over the next like 2 to 3 years?
Okay, good. And this is going to be a good refresher, right? Because repetition is the mother of all skills, right? So I'll keep it simple. 3 important things, right? Rule number 1, what do we do, right? The HEX holders, the Hexicans, is we're buying the dip while we stake, right? We're eating the pool from the inside. As people exit the pool, we're still in the pool with the same amount of T-share. As the total T-share gets deflationary, our payout percentage constantly goes up. This is why I said earlier, Axis pulled out the global numbers. It says, 36, 38%, and hang around the same. But some of us compounding 70%. Some people even in this chat have some of those 60 something. Why? Because what ended up happening is that because you didn't have to exit the system and get a new share rate, you stay in there with the same amount of T-share. As the number of T-share goes less and less, you end up getting more part of the pool. And that's what is really, really the key. So in other words, just by staying in position, it's like you're buying I call it buying the dip while you're stake, because you're just accumulating more. Now, number 2, which is going to be probably the next segment and probably in the next 30 minutes or so, when we talk about the macro, understanding what is it that we're playing. Like I told people all the time, right? Learn how to play chess, not checkers, right? 4D chess, understanding the value. This is a great accumulation phase. I mean, for crying out loud, we're getting closer to locations where when I first got in. I mean, it's still up, obviously, well from there, but still, this is a great time. And I'm getting the same type of vibe where if you got money on the side you want to deploy, or if you're still working or getting some other stuff, which I generate stuff no matter what, fiat, this is a perfect time for you to get that position because it's forming a bottom. Everybody can see it. Things are about to get activated. We're going to talk about that probably in the next segment about what's going on in the macro. But this is that time literally to double down. And on top of that, some early investors, or whether they're early or not, but big shareholders, so to speak, T-shareholders are literally popping up their back, freeing out some space. And as they're freeing out some space, you as the quote unquote smaller bag or whatever, you have an ability to literally attack the market and get a bigger piece of the pie, right? This is how we learn in business too. When your competitor regress and then lose market share, you even in a recession, your goal is to expand, is to attack, not to play defense. Because then when the bull market comes, you're controlling the market share. Instead of be like, oh my God, everybody's in contraction, I should be in contraction. No, Grant Cardone said it best. When everybody contract, you should expand. That's your takeover. That's when you solidify your position. You don't lose your eyes on the ball. You know what I mean? That's what's up.
Because we could be looking at some huge payouts in the future of this. If you look at the chart they have up there on the screen showing these two, you might as well, the lower one, just cross it out in your mind. So I had to abandon the forecast, which is based on how we've been acting, and my forecast, my base. This is assuming we continue to move forward like we have, kind of like in the past. We maintain T-shirts into the future.
Yes, sir.
My payout per T-shirt has gone up on that, from 22 to 24 almost in 15 years, and I think it's wrong. I think it's going to be like much higher than that. Now, why would I say that? I say that because if the FUD that I'm hearing holds people back, you and I and Axis and everybody else who cares about mining HEX are going to be the only T-shareholders, because there won't be that gathering. Now, eventually people will come back around, but you have this period of time right now where you can get T-shares 20% cheaper in terms of HEX now than next year.
Yeah.
40% than the year after, 60% than the year after. So if it takes people 3 years to catch on that this is a good idea, you're right. You're OG status again. I mean, whoever's coming in now, you might as well been a HEX OG, because like you said, those APYs just float upwards and to the right.
I mean, this thing, based on where this chart's going, if the lower bound is what's predicted and the upper bound is what could happen if people lose faith in the staking and the T-share, I'd be happy to find myself somewhere in between there, getting 10, 20 HEX per T-share. Like stuff that you did in 2024 a decade ago is paying you 20 HEX per day per T-share at even at 50 cents is like, you have to be forward thinking and think cycles ahead, but this is why the system will be so powerful.
Exactly.
Well, I think you should just look at the orange line and just assume it's going to be above that.
Yeah, you think so? What makes you think that?
Well, because I already feel like the pink line, the purple line there is invalidated by the actions that we're seeing, because so much, because I'm doing forecasts with numbers, right? And they don't tell you like what's happening today and what people are doing. And so the reason I feel that way, Axis, I go look at that T-share chart and I see that there's 17,000 T-shares in 2039. Right.
Yeah.
And I can see, and that's down like, I don't know, like a huge amount from the year before, which is down from the year before. So I know that people aren't engaging because they're chasing the, bear market, chasing the shiny objects. Nobody wants to wait. So it's going to take some time to reinvigorate, but that's huge opportunity for me because I can get the T-shares at a much lower cost for HEX. And so it's actually helping my ladder quite a bit, which is why I've been telling people I have been staking on both chains, Quattro Cinco.
Yeah, of course.
I'm not telling anybody else to do it. Don't do it. It's fine. I mean, I tell people what I'm doing, but and I tell them why I think I'm doing it, but it's actually beneficial to me if they don't. But of course, we don't think that way. At least to us, we don't think that way. We want more people to participate, so keep talking about it. But dude, when of course it's going.
It just makes sense to me. You know what I mean? I mean, since day one, my people they know. The stake class.
Yeah, well, take Randy Hilarski's. Use Randy Hilarski's example where he tells his guys, "Hey, you should at least have a minimum of 100 T-shares." You tell me people aren't going to be interested in HEX when it's printing $700 a day. When 100 T-shares,
hey, you just fell right into my trap. I've been thinking a lot about that. About what is Inc paying right now for a year for just a small investment? If you put 10 grand in there, you can make that number over the course of a year easy on Inc. That's just one side of the seesaw of the yield opportunities on Pulse Chain. Once HEX comes back into favor and it's gonna equalize. There's gonna be a harmonization that occurs. Like Inc can continue to overperform for so long, but eventually some of that capital is going to flow into HEX, which is going to boost the yields. And so you're going to have this seesaw effect. I'm waiting for this. I'm seeing early signs of HEX starting to take a stab at Inc right now. And it's exciting. I mean, we'll see where early after Pulse Chain launched, HEX was dominating the Pulse Chain. If you guys remember, it kept running up to 200, 250 Pulse per HEX. And then it took a backseat to Inc. And Inc, when everyone thought Inc was a piece of dog doo-doo and no one wanted to play the game at 39 cents per Inc, they got left behind in like a week, in less than a week.
They sure liked it at 9.
People, I was one of the guys.
Chasing that too, actually, you got to understand, because the liquidity came from somewhere. It wasn't like it was new capital. People, thought again chasing. Even in the HEX ecosystem or Reach Your Heart ecosystem, there's still some chasing going on. Some people sold their HEX to go chase the Inc, or sold their Pulse to go chase, PulseX or whatever it might be, dancing around, not understanding that first of all, they're all bounded. It's bounded liquidity. You should have set your ratio. Like I've told people many before even the fork, set it up, forget it, and boom. Now, I will say this. For those who came after the fork, then yes, you genuinely have decision to make. Okay, what's my percentage? What's, you know, how much do I want to exit? But the goal is to not overtrade. The goal is to figure out what your ratio is, set it up, set your position, and then move on. And then now when you got new capital, okay, where do I want to top off? I want to top off a little bit here or a little bit there, but either or, you got to understand who's king, right? Who's queen, who's the valet, who's the peon that's just there, hey, for free bonus. Because if you don't have that setup, you're going to be confused. You're going to move around. You're going to overtrade. And then when the real normalization happen, you're going to be left behind. Since the beginning, I've never lost sight of what was the most important. This is the reason why, just, you know, friendly reminder for everybody. Even in the bottom of the bear market, whatever, my HEX stake still prints $1,000 a day, minimum USD. I don't need to go.
Say you're winning the game, Karim. I'd say you're winning.
It's like
the game.
when everybody was telling me for even when, as much as I love Pulse Chain, respectfully, as much as I love PLSX, respectfully, and all the other great stuff, I came here for HEX. I never lost sight of that in my t-shirts, period. And I pump onto change. Whatever Richard said, this, tweet that, it doesn't matter. I got a free copy. I'm grateful. Whatever the price happened, I'm talking 2025. Who knows? Maybe Ethereum fixed their fee problem, and next thing you know, we get a push up. But the point of the matter is, I was blessed, but because I created the opportunity, right? What's luck, right? Is, you know, preparation means opportunity. So that I knew no matter what happened, I'm in a privileged position where I don't have to decide to pick a side. That's why the people back then, I told them, we're lucky, we're blessed. We don't have to pick. We're getting a free copy. Let it ride. Set your position. Know what you want for Pulse, percentage-wise. Know what you want for PLSX, percentage-wise. And remember that HEX is the main thing. So when the price started doing whatever it was doing and this and that and whatever, I'm like, well, I've been primarily HEX anyway. So it's like, it doesn't matter. People do their crazy emergency end state. I'm just gaining from the pool. It's getting to a point where I literally see the account. It start to move like a parabola. I start to see it like it's accelerating very, very fast, to the point where it's like I'm wishing for people to emergency end stake because I'm just accelerating. You know what I mean?
Same way, Crispy is just kind of.
It's like, imagine compounding at 70% and then, okay, price went down 40% or whatever. Okay, cool. Well, I'm compounding.
Yeah, but you're exponentially, you're gaining. So this is like a big conversation piece that Crispy and I always talk about, which is units.
Yes.
We're always talking about like who's capturing the most units at the bottom, right?
That's what I'm saying.
And so like your unit capture, your DCA is accelerating on a curve like this, and you don't have to put $1 in. And people,
and that's why haters want to hate, but it's like, bro, it's bear market, but I don't feel it. But again, it was very deliberate. I knew what I was holding. I knew how the game works. I knew what Richard said.
So I think the messaging that we should probably nail right here is like, well, then where's the meat on the bone for like the next guy? And that's kind of what Crispy's showing here with this 2039 look at is like, okay, even though Karim is exponentially making more HEX every day, why is there still meat on the bone for anyone else that wants to play the game? That's for you, Crispy, to kind of take that lead.
Yeah. So we have up on the screen is what I call my F2 estimate. You know how I showed you that orange line with the payouts going up to 23? And I told you there's a low. This is the corresponding estimate for the T-share rates going into the future. And so I'm pretty confident we'll be close to 300,000 HEX per T-share. I mean, it's math. It's pretty linear, actually, when you look at it this far out. And it could be higher, right? Because people might do something different. We might see a capitulation event. I don't know. We might see massive adoption. I don't know, right? Either of those things could change the curve.
Well, I see. That's where I think it's not a if but a when type of thing.
That's true. Because like Chris just said, it can grow linearly or it can grow exponentially. It depends on user behavior. In other words, if people behave normally, so to speak, where it's like people end their stake, new people come in and restake. So it becomes the thing that I basically preach, right? Stake, dig, and chill. Take what you need, restake the principal, leave off your interest. So it just creates a self-fulfilling prophecy when it's a balancing act where what's coming in and what's coming out is balancing as the price rises. Now, or it could just be like, okay, emergency end stake, panic, this, that, the third. Then there's a big imbalance. But that imbalance, because it's bond math, all of a sudden APY goes crazy. Because now the people are supposed to hold the rock, dropped the ball, took whatever, puked out, but then it creates massive opportunity for the new person that was like, oh, my APY is so low, Well, guess what? Big people left the building. Now your APY, without you doing that thing, is increasing. Now, but what are you going to do about it? Are you gonna cry and be flooded out and be like, oh, they're exiting, they're frustrated, exiting, be like, oh no, they dropped the back. That's opportunity for me. Let me get in the pool. Let me get a bigger portion. Because now when you hear about 300, 400 million HEX being emergency end stake or whatever it might be, or a billion HEX, what is it, a couple weeks ago? I don't know what that was. I was in Colombia, but that was like two months ago. It was insane. I woke up, there was like a billion HEX that was like out. I looked at it like, oh my God, how many t-shirts is that? I was like, yo, 100,000 t-shirts just left the building.
I know, man.
What?
I know. It's pretty crazy. The fact that the system's so stabilized too. Well, and so we look at these numbers, and I think that, I think we go out 10 years from now, it's realistic that HEX, if it survives, which I think, of course, I think it will be $5, right? And
Easily.
So I think when we get out that far, you'll be looking at $1 million t-shirts.
Easily.
And
remember, those billions of HEX could have been sold at a much higher price. They're getting like leaving the building at such a, like, I did an analysis. There was a guy, he had like at the top like $80 million. And then by the time he sold everything and a 56% penalty, he walked out with like 800K or something like that, or 900K.
Oh my God.
But then it's like
selling your future for chicken nuggets.
Well, yeah, and it transfers the value, and so what ends up happening is stuff like this. This one I think you really like. I know we're probably encroaching on you guys' time for what you want to do. So this is a chart of this is a chart of what we've seen for trend. So if we look at the top chart, and that's PHEX, HEX on Pulse Chain. The green line is kind of the rough prediction of what the t-shirts would be in 15 years. The gold line above it is the theoretical maximum number of t-shirts that could be in existence.
Yes.
Excluding the OA.
Hold on, you just made me want to do some math. So what 40,000 t-shirts would be what percentage of 4 million? 1%, right? Easily. 4 million times.
Yeah, 40,000 makes you like a shark.
Hold on. So listen to this, guys. If this is true, and there's only 4 million t-shirts in 2039, and you're securing your 40,000 t-shirts today, and I'm looking at you, institutional guy, or I'm looking at you, BlackRock, or I'm looking at you, endowment fund for some Ivy League school, securing those 40,000 t-shirts today for like nothing. And being able to ride that out, you'd have 1% of all of the t-shares. That'd be whale status. So you'd be securing your whale status now, basically.
Yeah, exactly. Now some people may not have the wherewithal to get 40,000 t-shirts today, but if you want to protect your dolphin status, make sure you plan to have 400 t-shirts.
Yeah. And it's funny because 2 years ago, literally, I predicted that. I literally told people the only difference is I thought it would happen by year 7 or 8, but it's happening now. I even tongue-in-cheek was joking. I was like, hey, everybody knows Super Shark, whatever, because I have multiple wallets. But I literally said the Dream account can become Shark by itself if this trend continues. 100%. It makes sense. Dream account has about roughly 8,000 t-shirts. So it's like at the time I did that prediction, we were like at 12 million. And then we quickly dropped, and then now it's like 9.6 or something, or 9.3, whatever that is. It's like it's moving fast to the point where it's like you just stay in position while everybody's exiting. And by the way, that's not even counting the penalty, the potential restaking, because then if you do a different strategy when the stake ends, and you can just double down and push it away, and you just get there. So it's like this is the part when you should be salivating. Again, this is business 101. Some people forget. Some of us we run businesses. Like I was rich before crypto. Like this is the time when literally you salivate and you attack. Like the number one thing people should be asking themselves is like look at how many years of flawless operation with everything that fails around it. You never hear anything about, oh, HEX is not working today, or da-da-da. Yeah, people can complain about the price, this and that, whatever. Hey, it's about time in the market, not time in the market. You're getting paid every day. If you leave off the interest, you never sell the principal, you're always winning, period. I don't care what the price is. You're not selling. You're turning it into a money machine. It's t-shirt preservation. So that as the t-shirt acceleration happens, as it gets more and more expensive, your worker is getting more and more valuable. The goal is to add the worker. It's like being in real estate, buying a bunch of property or blocks, so to speak. Then there's a big recession, and all of a sudden, oh, let me sell all my properties. No, that's dumb. That's when you expand. You have cash flow. You have money. people are like literally about to be on the streets. I mean, I hate to say it, but it's like, this is literally when you can be like, yo, I'm buying your property right now, pennies on the dollars. That's what it is. Business 101. If somebody got an $80 million account and I can buy it for $800,000, trust me, I'll make a couple phone calls. I'll call some boys. We'll raise the money. We'll be like, yo, let's buy this account.
So this guy, George,
1%.
This guy, George Shop, says, no, it's both timing and time in. And lucky you, George, we're going to be talking about timing the market.
Yes, later on. Yeah.
We got an amazing chart for you, Karim, that we're excited to share. Two of them. Nice. One of them is the Mayer multiple on some of our favorite assets, but the other one is the golden ratio multiplier, which basically can call the top on the day. Like it's flawless, dude. You want to talk flawless?
As long as we're talking on years and not timing on days and shitcoin stuff, I'm agreeing with George.
Yeah, cycle swing trades. Yeah, 100%. You can somewhat time these things. Of course, if you try to play this cycle and in upcoming cycles the same way that the cycles played out in the last 3 cycles for crypto, I think you're going to be sad, because this whole Bitcoin ETH ETF thing and TradFi coming in with this amount of size is definitely going to change the cycle. And being a former miner myself, who mined Bitcoin and Ethereum and knows the economics of that, we understand that the energy dynamic and the production of and at scale of more and more efficient miners, and the amount of capital coming in and debt-based mining operations and stuff, that all that going on, it's really kind of going to squeeze the volatility out. And because like the mining, the halving is so, it's becoming less and less of important in the 4-year cycle theory, and realistically as well, because these miners have been able to bring their production costs down so far. So
yeah, they almost becoming irrelevant.
This actually will become the golden age of mining, because it's accepted and you can do it at a big enough scale now with low enough energy costs and infrastructure costs that you just don't have to sell. You could just take debt, because it's official now. It's like it's a real thing now, right? It's not just like it's not so much speculative anymore. Now it's an actual full-on business model. So anyways, my point of all this was like, you're going to see the cycle start to evolve and change, but I still think that this GRM is going to do a pretty good job of nailing it.
Yeah, I think we still have the basic 4-year type of cycle in play now. Whether it elongates, gets shorter, I don't know. But what I do think, I was talking about this on our my private stream tonight. I think that we have invalidated, and I think Plan B had said this too. We've invalidated the lowering the lowering gains. So this idea that you every cycle
diminishing returns, right?
Diminishing returns, right? Now, why do I say that? So when we go to the GRM, we go look at that, and you look at the rainbow chart. We hit higher on Bitcoin. We hit higher, but we hit higher in the rainbow on Bitcoin than we should have at this time. And so, without knowing, if you didn't know anything about the ETF and you went and looked at that, you might think, this whole thing changed, and then all of a sudden we already hit a top and we're never coming back up. That's why you had so many people talking about this left translated cycle stuff, right? Because it looked like something that spelled doom, but here we are, and we're still moving forward.
I think and believe a couple of different things. I think this is going to be a great transition, so we can go into kind of the macro. Obviously, still tie into HEX because we get into the 1 hour mark, but it's a combination of a couple of things. So the people that do their left translated cycle, I see some of the validity, like Crispy just said, but ultimately, what happened the following month just reminded me, like, no, that was just an anomaly, because there was a lot of pent up demand. A lot of people almost thought that this crypto ETF will almost never happen. Then it does happen. So now people got to catch up, like what's happening with Ethereum. That's why it pumped 20-some% in one day, because a lot of the people, especially the maxi, they will never get the ETH ETF, which to me was a no-brainer. But so they got to play catch up. That's just human being behavior. So what ended up happening is that because they got to catch up, and then the FOMO kicks in. People think like institutional investors don't get FOMO. No, they're human beings just like you and me. So retail guy can get FOMO. They can get FOMO too, because they used to think crypto is a joke. Now they realize the return. They see the inflow, the ETF. People are running for the hills because inflation is real.
It's not just anything. I mean, these ETF products on Bitcoin have done record numbers. The most successful ETF products ever launched are Bitcoin.
Exactly.
Now you get a second chance with ETH.
Listen,
you could have like this, where it moons, the ETH BTC ratio moons
back.
21% in a week.
And watch until you break that trend line, which is one thing I wanted to talk about, bro. It's gonna run again back to the, anywhere between 7 to 8% of a Bitcoin. And then again, as the Bitcoin dominance, which we're gonna talk about next, is also continue to go down. This is literally where we get the alt season. But just to talk about that specific thing, it's like the left translated cycle or whatnot had that validity because of what's happening in the chart. But I think I give more credibility to human behavior where they're playing catch up on something they thought would never happen, which then created that surplus. And those people, they play with big money, bigger money than us. And, crypto, it's like when you start bringing real billions and billions of dollars on an asset that's like, very, very volatile, it can really pushes the price. So everybody knows that on any given day, it's 35x from bid ratio volume to market cap. So it's like, what that means is if you got $1 billion, you can move market cap easily 30, 40 billion. So when that real money started to come in and buy the Bitcoin, which that made, again, a Glassnode, or if you look on CryptoQuant, the total amount of Bitcoin exchange started going down, then they really, really pushed up the price. Even when I was in Miami, people were calling me, even people that I'd never even met, that, we're trying to buy Bitcoin. We're looking for OTC desk and this and that. I'm like, bro, where the fuck were you? Now everything is drained. Miner don't have it. They don't mine enough. They sold what they needed. They keep what the rest. They're not going to sell it to you. And then most of all the other desks is getting drained. In other words, you got to go on market to buy. And you got to go on, you can spread it on the exchange all you want, but eventually, if you want to buy hundreds and hundreds of millions of dollars, you're going to start also hitting that liquidity to the point where now you got to hit the bid orders, because there's not that many. Nobody's willing to sell when they realize that, it might be higher. So this is what happened, because they knew, common sense, if the ETS is launching in a month or two, whatever, why the hell would I sell before the launch? That doesn't make sense. So that's why they ran it. They ran it all up past the all-time high. Everybody thought, 786 retracement. No, you're playing with Wall Street money this time. So he didn't do what he was doing before, because usually that's what he does. He runs to 618 or 786, just like the 14K mini top with the Ponzi, and then cools back down, wait for the halving, and then up we go. But this time around, he went a little bit higher. But the mindset is the same. He went higher just because of
here's your 2015 fractal in green, and I've had this on here since right here, August of 2023. I had put this on here. And so you could see how like this Wall Street move, or I shouldn't say that. I should say with the approval of those ETFs and the inflows and stuff, I mean, it totally changed. I mean, this thing's way more bullish now. And it's reflected in the supply being lower on both Bitcoin, and now you're seeing that same relationship here.
We saw the Bitcoin negative premium go from -50 to like close to 0 in a record pace. I mean, it was insane. And this is what's happening, because those people are literally just saying, hey, we got so much money, we'll put the bid order, anything less than 40K, we're just buying. So it's just like, whatever, let's just get the coins off those people. So that's what ended up happening.
Sailor's a genius, man.
Yes, and he was out there. Look at the Ethereum one. Look, literally in a couple of weeks, look at what he just did. And if that's a fractal right here, because if you look at what Bitcoin did, its negative premium, how fast it closed, you switch to the other one real quick, you'll get to see what Ethereum is about to do. Because they launched it right around like January or stuff like that. So when Bitcoin was closing its negative premium, if negative premium was still down like 15%, 12%, but then now that they're getting the rumor that's about to happen, which it will,
it's like locked in for all year.
And by the way, this is deceiving because it's near zero, but in other words, it's positive because it's near zero as the price is rising 20, 40, 50%. So it's zero from current price. So in other words, if the price went up 30, 40, 50, 60, 90%, I think it was from when he launched when it was approved to when it became like official, it did another run up on 90%.
This market's getting pretty efficient.
Yep. And this is the reason why the SEC was found, arbitrary and capricious. This is what, for me, was a foregone conclusion that Ethereum is going to get an ETF, because guess what? They already made the mistake of approving Ethereum futures. So in other words, to not be sued by the SEC by saying, hey, the same way Bitcoin got his, you got to give Ethereum his because the future already exists. If you don't, we're going to sue you. They had to do it. But at the time when they approved it, they never thought the Bitcoin one would be approved. So when they did it a year ago plus, they thought, it will never happen. Let's just give them the Ethereum just to make fun. But that ended up being the Trojan horse, because legally, common sense, the CBOE and the CME, Chicago Mercantile Exchange, they're not going to list something that's illegal. In other words, if I'm listed as a commodity, I cannot be a commodity and a security at the same time. And they're not going to list something that's illegal. So they already had jurisdiction. That's when I knew it was only a matter of time. Now, future ETF, honestly, it might take a few years. Who knows? Because now you don't have the same precedent that Ethereum could use thanks to Bitcoin because the future already exists. You need to see a future ETF of another coin or whatever before you start dreaming about the ETF being approved. That's just a footnote. So back to what we were saying, all that pent-up demand created that left translated cycle. It's just pent-up demand. But back to a historical graph, what does happen? We run to the 786 or near all-time high, let's just call it like that. Then we cool off. We wait for the halving. Halving comes 2-3 months later, sometimes 4 months, up we go. I mean, Richard even tweeted about it. And now when you just ignore the left translate just because this is say human being being human being, and now we hit the halving in what was it, April, right? Ish.
Mm-hmm. April,
May. Now we're doing the sideways bull flag, just like we've done before. Mm-hmm. Ethereum is mimicking that too. So now you're waiting for that 3-4 months range to understand macro, what's going to happen. And why does that work perfectly, right? Let's do the math, right? April. So that means May, June, July, August, right? Let's just even say round it up September, back to school. Why is that important? We're in the election year. September is cool. Trump already said yesterday he's pro-crypto. What does that mean? The Democrat has to be pro-crypto. If not, the potential 50 million voters are going to be like, oh, you're not one of us? Okay, we're not going to vote for you. So he already lit up that candle. And he's raising money in crypto already. So he's already with us. Number two, SEC is being sued and losing left and right. Just, what is it, today or yesterday? They had to pay like a $1.8 million because, again, of malpractice, for lack of a better word. I wouldn't be surprised if, RH case gets dropped or some type of, again, malpractice, and then up we go. Those are things are very, very bullish. So you add that, you add the fact that usually, and then that's what phase 4 is for, is you get the confirmation. It goes into a bull flag like it's doing right now, 2 to 3 months after the halving. And then once you break out the bull flag, usually around the end of a month, and then the following month is the confirmation candle. Axis, can you switch to monthly candle, please? I really want to hammer that for people so they understand what phase 4 actually means for the type of the video. Because
are you gonna roll DXY into this at all? That's why I had this up.
Yes, at some point too. Yeah.
Okay, let's go back. We'll go here,
and then we're gonna talk about the plumbing.
Second.
But I just want to show a little macro real quick.
Boom, boom.
Perfect. Anybody that can look at this like it was regular, what is it? Boom. Breakout, new all-time high, consolidation, right? Usually it's 2 to 3 months, and then up we go. Yep. If you look back, literally in July 2020 to 2021, right? 2021, it was the same thing. What did we do, right? After we ran to the 786, so to speak, then we cooled off. We got the halving right after the COVID dip. And then in 2020, we did that near the previous high, 786. And then we did a consolidation, and then off we go. The only difference is, compared to last time, instead of going to all-time high, we went to the 786, which is what everybody expected. This just blew up, I believe, just because we're just dealing with bigger money. But it's the same pattern. We're getting off of the bottom. We run crazy. We cool off. We wait for the halving. 3 months later, on average, off we go. And we're literally in that third month. And the confirmation, June, combine that with DeFi summer and everything that I just said, combine that with the Bitcoin dominance already breaking down from the rising wedge. So now you get to see what is happening. The monthly is so clear, it tells you. People cry, oh my God, why is it not going to? Bro, you're on a green candle on the monthly right now. Mm-hmm. What does that mean? That means that now you get ready for a potential other green, especially when you have basically 6 green candles in a row. It's good that we get that red one, consolidation, because people are going to get scared. They're going to be like, man, Bitcoin never had 8-9 candle green in a row. That's bad. So that red candle is good. It's just to stop that many greens in a row to reset. Because the red candle didn't really go anywhere. Look at it. It just literally just took back what it gave before.
It's consolidation above all resistance. So you're testing the previous highs of support on these monthly candle closes. It's all good. It's all bullish signs.
And the fact that the month of May didn't go below, because when you get a red, you're like, all right, cool, man, I get another red. No, it just literally pushing back up to say this is just a false signal. And then if it stays like that, and then literally end of the month is literally at the end of the week, guys. It's not even that long. June is literally right around the corner. And on top of that, you got expiration of futures, Bitcoin futures, Ethereum futures. That's expiring on Friday, literally 2 days from now. Max pain is right around where we are, roughly about 3,800 for ETH, whatever, 68 for Bitcoin, whatever. When that is off, and now we're ready for the next period, when everything is bullish, every other day you hear about another big company that's doing the what's called the Bitcoin strategy, like whatever.
Dude, though, the state of Wisconsin bought like $130 million or something worth of Bitcoin funds. This was just like a few weeks ago, like the state, like
just yesterday, I think it was a company, Similar Electronics. Boom. They just did the
also
the
the states strategy. Are actually pushing for like sovereign money. Like each state, there's individual states that are basically pushing for it.
And it's international too. Japan, I forget the name of the company.
El Salvador. I mean,
El Salvador been a new company. I'm talking about literally this week. And their stock is flying like 28, 30, 40%. One of them, the stock literally double. And they've never seen that in the stock market.
Like all these companies and all these countries and states, they're tying themselves. They're attached. They're hooking up their boat to something that's actually going to go up in value over the long term. So it's like hitching a ride to something that's going to overperform, which that's super bullish. I mean, it's just like, let's break down some of these indicators quick on the monthly here. Like on the DMI, obviously you had that huge bull. This is just coming back for a nice little reset. So bullish momentum is screaming. It's coming back for a nice little. It's going to come test this this white momentum line here. Probably bounce hard off that.
Bounce off that like a support. Everybody knows DMI is my favorite indicator. So again, until DMI, and again, the longer the duration, the more strong the indicator is. Usually I use it on the weekly. Monthly is even better. It clearly tells you the trend is your friend. It looks literally like 2017.
Last cycle you got this. Oh, I mean, so a couple things. It was 2019 summer leading, and then this was DeFi summer here, and then Bitcoin closed out. February 2021 was the highest levels on the DMI here on the monthly.
Yep. When you switch it back to weekly, we'll show something cool. Switch it back to the weekly, keep it on DMI like that, and then switch back to weekly just 1 week, right? It gets even more deadly. As long as it doesn't cross, off we go. Every time it crosses, those are the tops. So, and then you can see the false signals in between. That's how good this is. So I told people like, hey, you can come and flirt, but the fact that it just resets and it doesn't cross, you just bullish. You can literally ignore everything else, keep it on the weekly like that, because it's literally track what the market maker is doing. You can manipulate price, make a lot of buy and sell, heavy volume, but not really move the price. DMI really tells you, is more energy coming in or is there more energy coming out? It's literally that simple. And as long as the momentum is still green, you're cooking. So now you just see bull flags on bull flag. RSI got reset. DMI is still good. It's just cooling off. You know what I mean?
And I want to point this out too, which is like something that I want people to be aware of is like you may get, and this may be really good for you if you're in Pulse Chain or ETH, you may get a period of sideways here until August, September, October, which is what you'd want. And that's the signals coming in here on the stochastic on the monthly is like, this looks like it's going to cross down and we're going to get a chance to reload here and boom, it's going to eject off that level. This is sometime the end of this year. I don't know when exactly, but depending on the rate of decay on this stochastic momentum oscillator, then it's giving us time. So it's good. If this,
and by the way, sideways action for Bitcoin is good because what really matters right now, energy is going to be on the ETH ETF and the ETH play. So in other words, if Bitcoin goes sideways, as long as Bitcoin does not crash, that's the key. If Bitcoin doesn't crash and goes sideways, energy moves to Ethereum or gets shifted, Ethereum push, and then DeFi summer is up and running. And this is really what the key is because it's just wealth transfer. Big money that makes a lot of money from Bitcoin. They bought it at 15K. Trust me, they're not going to just cash it out and go all fiat and pay taxes. They're not going to do that. The way they cash out is they funnel the money into another coin that they know has product market fit, that they know is going to be here for a long time. And let alone if it's something that's going to run and do the same play Bitcoin did. I mean, literally, Ethereum is doing the same playbook, right? They made their first announcement. The negative premium is closing fast. Literally just went from negative 30, whatever the percent was, to like almost zero. We're waiting for the S1 file.
And these fund managers, these brokers that are creating these they can just issue paper Bitcoin and sell that to their clients. So like their exit route isn't even through selling Bitcoin anymore.
Exactly.
This is just this is like a forever generational accumulation.
And they made so much money on Bitcoin. You think they're not going to run it back for Ethereum? Yeah,
let me say this too. Last piece on this was just that this RSI it's a nice RSI because it gives us like a Bollinger Band inside. Look at this is just coming back to back test the middle of this bands here, right? So it got rejected off the top, coming back into test. It can fart around all the way till September, October, and bounce. And this is all good action. And it's all bullish. So super exciting for Bitcoin. I think we could probably roll into Ethereum quick and see what you can see in that chart.
And also for the macro as a whole, right? So Ethereum, to recap, right? We got the first inning, which is we know the ETF has been approved. Now, do we know exactly the date? No. Speculation says mid-June. It could be July. Who cares? The point is it's coming. So next month, based on what I just said on the monthly chart with the confirmation candle, that's what's called. Because when this green candle monthly closed, it's mad bullish because he invalidated the red candle, and you can see how it's engulfing the previous month. Yep. So now you're seeing that it's literally, hey, we did a consolidation. Ethereum is in a textbook move, like previous cycle. You see, it didn't do the new all-time high. It went near the 618,786. This is literally what we usually get: 618 to 786, retrace. Wait for Bitcoin to hit all-time high after it passes the halving, which is literally what we did, textbook, and then off it goes. And because Ethereum didn't have an ETF action, it literally did what we expect, because that's what the big money usually see. When did Ethereum start to kind of pump and other altcoin, and even you start hearing about the meme coin, you start hearing about the ordinals? It wasn't when Bitcoin hit all-time high. No. When Bitcoin passed the 786, hit 55K to 60K, you already heard about the meme coin and the ordinals, because in the OGs, they thought, oh, this is a textbook. 786 is going to retrace. Let's wait for the halving before we go all-time high. Even those people were surprised about the all-time high, because they thought usually we don't get all-time high before the halving. That's why I'm saying this is just because of the velocity of how much.
I like that ETH is more on pace for a normal cycle, because it's acting kind of like an anchor that's more. It's going to be more predictable in this way.
And now they have something even better going on from them. It's like everybody's hating on it. Everybody forget about it. The Gwei's all low. The yield.
Oh yeah, Gwei. I've seen it down to 2.8 Gwei. Like the gas narrative is gone right now. I don't know why.
And they just got another gift. The fact that the ETF, if cannot be staked, you know how genius that is? That means those who can stake, this is like pool 101. You're not in the pool with your billions of dollars. That means those who are in the pool gets to collect. Make no mistake about it. Things like the Aave, the compound, and everybody just stake ETH native.
Let me show you something kind of interesting I found today on the
banking on
ETH chart. This was so hold on a second. This one here. So a couple hours ago, I posted this. This is one of the liquidity pool, one of the biggest liquidity pools on Ethereum, which is pairing ETH up against USDC. Yeah. And there was a $50 million wall of liquidity right here. $50 million protecting that 3750 level. And when the price bounced off it, because the price just couldn't get through it to the downside, there wasn't enough supply to push it through there, or like demand to sell. And because it was on, they just couldn't get it through there. It actually bounced off that and started going up. And I checked it like an hour or two later, and the price was like up in this region. And then whoever put this band in here, they pulled the band. Yeah. So it served. So what this was, and for people, a lot of people don't know what this is. This is a histogram that shows you where liquidity is sitting, and this is basically you can set ranges. So you could make a range. Let me get a color.
Everybody's getting trigger happy because you can't wait.
You could make a range like here. You could make a tight little band here. Well, what this guy did was he put a $50 million bid wall here, so that if it basically, like, if the price came back in, if the ETH price went down to 3750, it would bounce off like this and go back the other way, because it just couldn't. There was not enough to sell to go through that. And so, anyways, if I go look at it now, this bar has been removed and price is up here now. It's like we're at 3,800.
Yeah, because what he probably did, he put the bar here to try to entice somebody to sell. But then people are not selling enough. Then they get handsy. They don't want to wait. They remove and it's have to market buy.
Exactly. That's a very key point, because if the price did fall through for a second, this is now turned into 14,200 ETH. They pull that off. They just required $50 million of ETH and didn't have to hit the buy button at all, and then they can just pop the price back up.
Trust me, if they want to buy $50 million worth of ETH, they know something, or they're expecting 100%. Something to happen very soon. Which again it's a combination of, I don't just want to say common sense, but if you're looking for the clues are there. The technical is telling you break out the bull flag. The DMI is telling you we're good. The timing of the cycle, which we just talked about, which is ETH move after Bitcoin, when Bitcoin is doing the all-time high, check, passing the halving, check. And now it's just doing his little kind of like sideways-ish while the dominance is going down. And ETH is going to win no matter what, because now ETH pumps harder, period. If Bitcoin doesn't pump hard but just kind of goes sideways and do not crash while the dominance crash, ETH can still run, because it's getting all that energy and they want to run it. Because buy the rumor, sell the news. Right now, they were only behind on the ETH because they thought it would never get approved. That big 20-some% pump, that was just a catch-up move because they never thought this would happen this fast. On top of that, now, once the official date is announced, oh, bro, it's going to run. It's going to run. And those who have it, plus those who understand that, hey, if they can't stake it, that means I should even buy more and stake it, which remove more ETH. Because the people in the ETF, they're not going to sell. They're going to buy to hold. And now they can't stake it because SEC didn't approve it. So they're more incentivized to pump the price higher because now they lost 5% on the yield of the native asset. So now they got to just keep doing the game of price appreciation. So it's in their best favor to even pump the price. And you as a regular guy, so to speak, or a non-institutional investor or somebody that can buy on the exchange, you even incentivized to buy your own ETH and then stake because now the yield is going to be more valuable as the price goes up. And you know that the big player cannot stake it because it wasn't approved. It just doesn't get any better than that.
So let's talk a little bit about why this is bullish for altcoins and what we're seeing. Crispy, if you want to start, and then we'll come back, and then we'll go Karim, then we'll go me. What are you seeing in this chart here, which is the BTC dominance coming into this resistance here? Anybody got any commentary on that?
You can even draw the rising wedge from that bottom. I mean, it broke down. You can see it from that 2023 pump-ish. There was like a rising wedge that has been forming for the past 6 months. Finally broke down out of that. Yeah. And I think we're literally at that same section of like, you know, end of 2019 to 2020 when the dominance started to puke down. And then if you look at the macro, you got the rising wedge that broke down. You got the descending triangle that you perfectly drew out already. There's so much confluence right around summer/end of the year. You know, BlackRock is definitely want to tokenize economy. I mean, you can just see it. You know what I mean? If you look at the DMI on this,
DMI is getting
crossing,
topping, triple top, head and shoulders pattern. The RSI is curling over. I mean, you don't want to see on a monthly chart this much running out of steam action. This is going to come test these bands, might have one final pop and then dead. And then the stochastic obviously it's been fighting it for a while now. It looks like it's going to cross the 80 line, and then you'll see that
it's getting too heavy. It's been on the overbought for way too long because it's on the monthly chart. And then you add a couple more factors, which is very, very important, which is again the potential future president being so pro crypto, buying Ethereum, mind you. You know what I mean? Because these wallets out there. And then he also had his, NFTs and all sort of stuff. So it's like you got BlackRock saying they want to have a tokenized economy. Trust me, they're going to do it on Ethereum. You know, as much as people want to speculate about Solana, nothing wrong with Solana, but like, they want a real blockchain. They don't want something that can just be stopped at any time. You know what I mean? That's just my comment on that.
I'm curious to see what is ETH dominance doing at the same time. So yeah, it's looks like it's look, that's a huge hammer candle. Like that is a scary hammer candle there.
And the biggest owner of ETH were some of the biggest owner of Bitcoin too. I mean, shit, Coinbase. Look at the Coinbase even chart doing well. Every time Coinbase, the coin do very well, you expect ETH to do well.
Look, dude, you just gave me. Let's look at the stock once and see. I think it was round. It was doing this. Yeah, is that what you're saying here? Boom.
Yeah, it's literally mimicking ETH. Look at it.
Yep.
It's doing the same thing. Went to like about 786, not all-time high yet. Doing the confirmation, waiting for DeFi summer, and they're gonna pop it. Now, to not be a party pooper or anything like that, what's the potential downside, right? Now I want to talk about DXY. I want to talk about interest rate, the not so popular thing. But it's not like it's bad. It's just that it's something to watch out for.
It's just a matter of, and let me, before you get going on it, because I know you're gonna have some fire to spit. I think the DXY and the oil price and potential pressures and stuff, it's only going to be a this year thing, and next year things are going to, they're going to blow up. Basically, I've been watching this DXY chart for a while, and whenever the DXY goes up hard to the upside, it does affect stocks and it does affect crypto negatively. But I think what this is going to end up happening is if it can even get up into these ranges, I think that's where you get the rejection hard to the downside. I think that's coming, but you are dealing with this, like, since 2008, we've been in this giant parabola. Question is, like, where does this stop out at?
Yeah, exactly. So a couple of different things for the new guys too. I'm trying to summarize it as much as possible so they understand what I call the plumbing, the mechanics, and why DXY is important, right? Look at like money and currency, like it's just relative value, right? Because what's DXY? It's just literally the dollar index relative to other currency, right? If you have a stronger dollar, because the dollar becomes stronger, buy more of other currency, usually stock markets goes down. Now, Karim, why is that? Because usually what people want to do is they want to take profit into stronger dollar, because with stronger dollar, they can go, I'm talking about big money that have worldwide access to investment. They can then go buy cheaper euro. They can buy cheaper Australian dollars. They can go buy cheaper British pound and invest in those deflated area for make the next investment, because that's what they do. They just keep rolling in, because they're not just making money in the stock market. They make money in also Forex and currency. The same way when the dollar gets too weak, to compensate for that weakness, aka inflation, they want to go also pump the stock market, because also cheaper dollar also means if I borrow money to go pump the stock, it's also cheaper for me to pay back, because they're looking at the risk associated with that. Now, what controls the DXY is the bond market, right? Because again, just like HEX, it's literally bonding math. Bond markets do very, very well. All of a sudden, people are going to be like, all right, cool, let's exit out of stocks. Let's go to bond markets do very, very bad. The value of my investment. So I'm like, why am I holding this bond? Let me just go take some higher risk in the stock market. So there's a relationship in those two things. And what can control what happened to the bond market, so to speak, who's buying, who's selling, is primarily the Federal Reserve. Yes, people around the world are buying the bonds, but at the end of the day, the biggest buyer of bond is going to be the Federal Reserve, because if push comes to shove, they're going to be the buyer of last resort. So just to kind of recap what's been happening the last couple of months, what's good, what's bad, and what's kind of like, eh. So we have been dealing with a lot of inflation. Everybody knows that, 9%, it was crazy. Then it kind of went down. But now let's talk about rate of change. It went from like 9-some%, then it went to like 3.5, 3.4, 3.3, then about 3.1. But when it got to 3.1 early this year, then it bounced back up. It went to 3.3. I was like, oh shit. And now that's just a one-time thing. Then it went to 3.4. It's like, oh shit. Now people start to do the same rumor, just like it's happening in Europe. And I'm sorry for if you're in Europe. It's called stagflation. We thought we were going back towards 2%. And then the inflation is like, yeah, not so fast. You know what I mean? There's still a lot to deal with. And that's why the Federal Reserve, shout out to Jerome Powell, because he had a very, very, very hard job. It's like, as much as they raised rates very, very fast, and obviously hurt the economy, they didn't have a choice. Now it's a game of, we don't want to raise more because that's going to probably cripple the economy, but we're going to keep the rate elevated where it's at until we have consistent showing that the inflation is going down. So you got to look at the inflation like a chart. So when he went to 3.1 and then he went to 3.3 and 3.4, then 3.5, it shows, if you look at like a chart, it's like, okay, it's making higher, 3.1, 3.3, 2.4, 3.5. And where's the prediction where, oh, we wanted to predict 3.3, we got 3.4. We wanted to predict 3.4, we got 3.5. So they were missing the estimates. That's why the market got hit. And then the last 2 months, we just got a little lucky. That's why this bounce is happening, where it's like they exactly predicted 3.4 and they got the 3.4. Now, somebody can say, but Karim, it's still bad. It's 3.4. Yeah, but not so fast. For the first time in the last 3-4 months, they actually hit what they said they're going to do, what it should be. They say it's going to be 3.4, and it was 3.4. So it adds to the confidence that you guys knowing what you're doing, you actually predicted it and it hit. And another thing that's bullish, if you look at that in terms of chart, is it's a higher low, because he went from 3.1, 3, 4, 5, and then back to 4. So that little thing, it's just 0.1%, but look at it like quantum computer, right? It's technically a higher low. So the market took at it like it's a bullish thing. It's a little less than what it was before. That means the hardship that the higher interest rate is creating is paying off, and they hit the target of what they said they're going to do. Now, Powell is waiting for more economic data. We should be getting this week and then next week, because it's a combination of where the inflation is and where the unemployment rate is, because it's a dual mandate. They got to get it to 2%, or at least pretend that it trends toward 2% down. And they got to make sure the unemployment rate doesn't go out of control. The good news is Unemployment is not going out of control. It's still within the same vicinity of 4.4. The economy is doing okay. That's good. Because if you got inflation and a bad economy, we're fucked. So now
I think you have a situation in brewing where, you were the expert on macro. I think we have just so many surplus US dollars out there, and the rest of the world is dumping all of our debt, and they're getting rid of their bonds. China. And so the Fed is kind of stuck right now where rates are at. You might get a rate cut this year, but at the end of the year, you ain't gonna get any rate raises, I don't think.
But that depends on economic data, and that is the goal. That's what we're hoping for. The goal is, that's why I want to give people the bullish and the not bearish, but like the sober reality. It's like all the things we talk about is what should be happening. But if interest rate comes and fuck up the party because inflation is bad, this whole part is going to be delayed by 6 months. I just want to warn everybody right the fuck now. Karim, you said that. Yeah, it's just because it's on thin ice. It's looking good. Powell is working very, very hard, but it's in contingency of a lot of different things. And China is dumping the treasury. But the good news is because they raised so much so fast, so early to disincentivize people to take more debt and do crazy stuff, that's why it's keeping the inflation at bay. But because we have a good economy, people keep spending. And people keep spending, that creates inflation too. So it's almost like they got to create hardship to make people spend less, but they got to create hardship that's not too much hardship, because if it's too much hardship, then unemployment rate goes too high. And if unemployment gets too high, then they got to turn on the printer. So what Fed's been doing is keeping it steady to get people accustomed to the higher rate to deal with it. And because, human beings, that's what we do. We assimilate. It's hard, but after 6 months of hard, you get used to the hard. You know what I mean? You're like, all right, cool. As long as it's not worse, let's try to work it out. And that's what's happening now. And what they've been doing, which helped, is the increased global liquidity indirectly. Other countries are printing, that adds global liquidity. That's good for crypto. And Federal Reserve
doing this on the back end right now.
Exactly. And Federal Reserve, on top of the high rates, they were also taking liquidity out of the system at a rate of $90 billion a month.
But they have decreased their rate of removing liquidity.
Exactly. So that's an indirect. Yeah. It is an indirect stimulus. So everybody's focused on the rate. Yeah, it's bad. But
I'm glad that you said that, because we were talking about that in the boardroom with the contrarian. Remember Bob? Yes. I don't remember, but we were talking about that. When is that? Like 3-4 weeks ago that they were started really reducing the rate of decay of the how much they're pulling out liquidity.
Exactly.
And so it's like a backdoor rate cut, right?
It really is. It really is a backdoor, but they're doing it slowly, because if they're doing too much, they can create inflation, right? Because they're doing a backdoor rate cut by increasing global liquidity by just removing less. Does that make sense? So in other words, you were supposed to take another 90 billion, because they print so many trillions. They're supposed to remove another 90 billion this month, but they didn't. They only removed like 60, and they already scheduled to remove less. But you gotta remember, everybody's eyeballing everything the Fed does. And people want to front run everything. The moment you remove too much too fast, people get too excited. Oh, it's coming. We're back. And then they're going to start pumping, and then inflation comes back. So they have to do it very slow. They have to pretend like they don't care. You know what I mean? And that's why this
might lead to just an extended parabolic move. Like, look, there's a clear inverse correlation between the dollar going this way and the stock market going this way. They're literally doing the opposite of each other. Rates are flat, so that seems to be unchanged.
Yep. So right now, DXY is reacting for two reasons. A, obviously China is dumping, but then also because the Fed and then some of the big prominent of the Fed, they're like, we can't lower rates right now, because we're still waiting for that conclusive data that tells us that the rates are actually, the inflation is actually going down. Because the worst thing that can happen to the Fed is they lower rate too fast, inflation is still bad, and then they got to raise it again. The market's going to go ape shit, because they're going to be like, oh my God, you don't know what the fuck you're doing. Because I thought you had it under control, but you don't. Because you say something and then you reverse it the next month, that shows incompetence. So the best thing to do, believe it or not, is to stay the course and hope that the numbers are less. Of course, they're kind of cooking the numbers, let's be real. But if the numbers are really, really bad, you can't really cook it. You're going to have to just display it. So now it's good that they don't have too much unemployment. So that's good to have one problem to worry about, not two. But because the unemployment is not that bad and economy is still running, that creates inflation, because economy running, people spending is inflation. Now, if it just stays steady long enough, it's going to have to go down. Because here's the biggest joke. They don't really care about inflation. They don't measure inflation. They measure rate of change. So that's how dumb it is. What does that mean? Quick math, so I don't lose people here. What is rate of change? Let's say you had 100 and you get 10% inflation. It's bad. That means at the end of the year, oh my God, 110, right? So you just lost 10% of your purchasing power. But then if the following year you're like 111 or 112, you're gonna be like, oh my God, look, inflation, it's low, it's only 1.5% or whatever. No, the guy that remember 100, he's at 111, 112. That still sucks. Price is still very escalated, but they don't care about that because they don't look at it like that. They do year over year. It's a rate of change. So in other words, if a whole year goes by and the new basis goes from 100 to 110, whatever increase happens on top of 110 is what's being calculated as inflation. So in other words, for you to get another 10% inflation when the new base is 110, is you literally need 121. So in other words, if you just stay steady enough and the many years, months goes by and they're doing year over year, so the July inflation is going to be calculated based on the July of last year. The September inflation is going to be based on September of last year. And if the previous year we were already crazy inflating at a higher clip, 9%, 8%, whatever it might be, it's going to look like we're going down. So in other words, your real inflation.
Voodoo magic.
It's literally what it is. I'm sorry if people just realize that how fucked up it is, but that's literally what's happening. It's a rate of change that they're calculating. They're not calculating the actual inflation. They're looking at rate of change.
So some turmoil short term, but I think we're gonna get a pretty bullish next few years. I believe that.
Oh yeah, years for sure.
So I believe that like the NVIDIA CEO recently did a video and I saw this come across my feed.
Yeah,
and he talked about how like the issue that we're seeing right now is that all of the servers and computing technology out there has to be replaced by GPUs.
Yep.
And that would normally be $1 trillion overhaul globally. Yep. But if that'd be assuming no growth. So if we're growing at the same clip, it's actually a $2 trillion initiative to replace all of the computing power on Earth with the new processing power and GPUs and stuff. So that alone could drive us into a bull market. We're talking about a $2 trillion global overhaul, right? And that also makes all industries more efficient as well. So, with the advent of AI and cryptocurrency, I really believe that it's going to drive us into another decade-long bull market before we get that next big pandemic crash. And so, okay, something I wanted to bring up here, Crispy mentioned was, let's talk about for a second. I know we kind of touched on the state of the macro here a bit. Let's talk about for a second the rotation out of Bitcoin and into Ethereum because of things like the liabilities from the Mt. Gox Bitcoins. Like for example, Richard made a post. They said, hey, the Mt. Gox guys, they don't have any Ethereum to dump, but there's $9 billion of BTC to dump. What do you think is going to happen in that scenario?
Sorry, I had to go do something real quick.
Oh, good. Crispy, do you want to start on that?
Yeah, sure. Sure. The reason I was bringing that up, a lot of people thought about that. So the fact is that we, kind of expected to see a rotation anyways, right, from Bitcoin into Ethereum. So does this quicken that or does it get cut off? The idea that if Gox coins are threatened to be put onto the market, does that mean that suddenly people will alternate quickly into ETH? Or is it just overall bad if Bitcoin takes a dump? And I think you kind of answered that already, Karim. So I was kind of like thinking about that, thinking through that. I think it might be another one of these fake outs. I mean, it's been 10 years.
Exactly. This is why I look at it like this. I know that might be contrarian, but I think the whole Mt. Gox situation is like, it's bullish in a sense. And here's why. Let me explain, right? Quick math. So, and it's also to the credit of people like Richard Hart that have been talking about it for so long that it's like, it's been demystified. We heard about those coins for so many, or even the Silk Road and whatever. We just can't wait for this to be done because to me, it's bullish where it's like, okay, finally, they're going to just move this thing, get it over with, get it done. Because markets are always forward looking, right? Oh my God, it's so bad. The moment you got a new, all right, cool, it's coming on this day, it's done. The news get digested, whatever's bad, whatever, and then it's done. Because those guys, they got trillions of dollars waiting to come in. For them, if I'm a big buyer, obviously, I'm a big fish in a small pond, whatever it might be, but the mindset is the same. If I'm looking to buy a lot and I'm looking for liquidity coins to buy, and there's nothing because everywhere is drained, this Mount Gong situation is a blessing. You're like, oh my God, come in, 3 bill, shit, drop that shit, let me buy some because it's going to 150 and I need a 500 million. There's no way I can buy it. So please bless me with some dumps so I can buy the shit out of it. So that's what people need to understand. It's not bad. It's bad when you don't know. Uncertainty, unknown. Just like in sales, we used to say, obscurity is your enemy. If I don't know you, I cannot flow you. That's what it is.
Yeah.
If I know you, if I see where you are, I know what to expect. Boom. That money's going to come in. People are going to buy it. ETFs are going to buy it. They're buying what? $150 to $200 million average a day of inflow, all the ETF combined. Okay, 2 billion comes in. Maybe a week or two, it gets swallowed. Trust me. There's money sitting on the side ready to come in. Number two.
One-time inflationary event that is going to be capitalized on 100%.
Yeah, it's kind of
brother. Number two, not every coin will be sold. People forget. Some people literally will be like, nah, I want to keep my Bitcoin. I was on Mt. Gox. I got plenty of money. I want to keep holding. I know where this is going. Now, somebody can say, yeah, but Karim, they're going to sell it anyway. They're going to give them cash. They're going to give them coin. Okay, that's cool. The guy can sell it, get the cash, turn around, use the cash, buy back. So it's like, what are we talking about? If the guy has crazy amount of money, common sense says, okay, he cash out what he needs, change his lifestyle, maybe get a new wife, whatever.
Yeah, but these guys that have been waiting on their Bitcoin for that long, they've been playing the game anyway.
That's what I'm saying. It's like us. They battle tested, but they know how to huddle. They were forced to huddle.
They got it already. First ever time lock.
so if I were to put a guesstimate on it, like, and that's very generous, I'm gonna be like, all right, 40% gets sold out because maybe people got bills to pay, and then 60% gets hodled. And the reality is, after those people are taking care of their stuff, they're going to come back in and buy it. They're going to even believe in Bitcoin even more because they got their coin back. The price went up. How many thousands of percent since Mt. Gox was gone? So to me, it's a bullish event. It's not bad because
I'm with you.
Being known.
I'm with you. Yep.
Yeah. Well, sometimes liquidity events are good. Having more liquidity on the market.
Hey, we've seen this firsthand, right, Crispy, with Axis. Every time there was a massive crash, we saw the most amount of adoption.
Yes.
Anytime there was massive like inflation events, like a 10 coin sell or a 40 coin inflation event in 12 hours, that was where we saw the biggest boost of new users come in. They don't like buying it. We have some smart people following us because they don't like buying it when it's up at high in price. They want to buy that dip.
Of course, buy low, sell high. And by the way, this is nothing new. It's common sense in the market 101. It's also called a stock split. When a company is doing very, very well and they issue new share, like NVIDIA is about to do 10 to 1. 10 to 1. They're about to 10x the share, lower the price. What are they going to do that? They learned that from crypto too. It's unit bias. $1,000, $1,200 coin. And over there, it's even worse. It's not like in crypto when you can buy $100 worth of Bitcoin. No, you need the full money to buy a full share. You don't have the money, you cannot buy. You got $500, $800, you cannot buy an NVIDIA share. It's $1,100 and change. You need the full $1,100. So by making it low like that, they actually make it accessible. They 10x the number of coin. And what usually happens? People are happy they got a 10x, they want to sell or whatever it might be. And then guess what? Price goes up. Because new investors are willing to come in because if something has product market fit and is doing what it's supposed to do, the EPS data is there, the EBITDA is there. I mean, the volume, Axis just said it perfectly. I mean, the whole future world, AI, all this other stuff, it's running on what? It's running on chips. It's like energy. It's like when I was using solar. Are you think the world's going to use less energy or more energy? All those things are common sense, especially when you zoom out. Everything else is technicals. All that gets ironed out. All these things we talked about earlier, if you zoom out and get the big picture, inflation is not going to stop. Whether they get it taken care of or not, it's still going to be 3% plus. We might get to the 2% 2 years from now, if we're lucky. And remember, I said it best. The inflation, real inflation, never goes down. It's a rate of change. In other words, your cost of good forever goes up. This is what benefits crypto because you will never have less inflation on a real term basis than what you had the year prior or even worse 2 year prior. It will always get worse, which is the most bullish case for crypto as a whole. Click what I just said. Read it, listen to it twice. You will never in your life. Wells used to talk about it all the time. What is the chart of the S&P 500? When you chart all this thing compared to gold or whatever, that thing never moved. Why? Because it's just the value of money just get less and less and less. It's 99% down, 99.999% down the dollar. It's not going to change. They're going to print money. There's going to be more in circulation. and the unit is going to be worth less. It's just a matter of game of how fast does it go less. It's supposed to go down 2%. Compounded, by the way, every year. Now we're like 3 and change. And then soon to be by the end of the year with the new election and people get some money and bull market, 3 is going to be the new 2. They're going to make it fashionable because like, you're going to get to a point that they can't get it to 2. They can't. It's too much inflation, too much clog in the system. They have to keep printing. Now, technology is a great boost for deflationary event. AI is going to help tackle some of that inflation. But make no mistake about it. The moment inflation gets near the 2% on a compounding basis, they're going to turn on that motherfucking printer so fast you won't even know because they want to capture that energy. It's not for you. It's for them to print so they can just do whatever the hell they want to do. And the smart investors are going to protect themselves and they're going to benefit because they know where the money is going. That's your game. Not to control who's print what. Your game is to know where the money is going to go and be in position.
It's pretty scary that that's the way it is, right?
It really is.
I mean, I hate to get into the whole the rich only get richer conversation, but man.
But here's the funny part. It is a powerful quote, yet the rich as an individual varies. The same way people are like, oh my God, all the billionaires. No. The face changes. Most of the millionaires are self-made or like, first generation. It's just there's so many people that fell off that get replaced by new one. So the rich get richer, but the faces change. There's only a few because you got to have that discipline. Discipline, delayed gratification, hard work, understanding the value of something, right? A lot of people know the price of everything, the value of nothing. You know what I mean? It gets to a point where I want to introduce this new concept for people, because everybody hear me say a lot of the guys play chess, not checkers, right? 4D chess. Now I'm gonna go next level, 2024. Click this. It's like it's from the ancient Chinese. It's like it's called. Have you heard of the game called Go?
Yes. Chinese
chess.
Yes.
For more than you, Google this. It's called Go. It's Chinese chess. It also Korean plays that too. This is even more advanced. There's checkers, there's chess, 4D chess, and there's Go. And here's why. I'm gonna drop some wisdom on you guys. Because in Go, compared to check and checkers, what do you do in check and checkers? It's direct contact. It's direct confrontation. This is how you win. Especially in checkers, I got to eat your coin to move to the next one. Or I got to pass that line to get to the other line and get the queen and come back. In chess, it's still direct contact. There's a little bit more planning. You got to find out the angle. You got to set trap, sacrifice some peon, or sacrifice an important piece, but to win the game, right? It's the whole theory of losing the battle, but winning the game. But in Go, it's even more advanced than that. Mm-hmm. This is the reason why even the supercomputer took an extra 30 years to beat the Go master compared to the chess master. Because in Go, and this is the key difference, please pay attention, everybody. The goal to win, you can win without being directly confrontational. The goal at the end of the game is whoever controls the most surface area wins the game. Whoever conquers the most. So in other words, I can lure you over here, shitcoin, whatever, but then I win the big game over there because you came here when I wasn't directly confrontation. I went over there. We never met, but then I won the game. And that's why I want to warn people to really, really understand. Like, get something that has product market fit. Sometimes you see shiny objects. Sometimes you see things like, oh, I might make a quick buck over here. But then your real opportunity cost is over there that you missed. And then when the real run comes in, you get left behind. You're like, how the hell did this happen? China masters this stuff too. Playing nice or doing some of those things when, hey, they're investing so much money into infrastructure, into AI. They're buying a shit ton of gold. They're working on the bricks. They're doing all those other things that you just look at it like, if for those who travel like me, they know. You go to Asia, you come back, you think like, wait a minute, that's the place they said that was a third world country. Like, what just happened? And then you come back here, you're like, nah, I think this is a third world country. Like, and I'm from Africa. So it's like, you got to understand what's being played. Same thing with like, I'm going to use, maybe Solana as an example or whatever. Go make your money quick, but don't get lost in the sauce. People make shit on Ethereum, but you don't understand that might be the play. The VC pumped it when nobody cared. Then they made 10, 20x their money. By the time you come in to chase that, they're going to probably move back into Ethereum, the thing that you were shitting on. And then when the ETF comes in and they take off, and then the thing that you were chasing, thinking that was the next thing, that's how you get played. That's a go move right there. It's not confrontational. They're not going to tell you, oh, do this and don't do that. They're going to, oh, you hate this thing? Oh, it's the worst coin. Oh, it doesn't pump. Okay, cool. Yeah, don't worry about it. Don't worry about it. Yeah, just sell it. It's okay. Let me buy it. Send it with HEX or whatever. Because you know the price of everything. You know the value of nothing. So when the real DeFi kicks in, When BlackRock said they want to do tokenized economy, you think they're going to do on Solana when you can stop the blockchain? Are you crazy? No, they're going to do it on something that they know that's actually real decentralized, closer thing to Bitcoin. There's a reason why there's a future ETF, Ethereum, Bitcoin. There's no future Solana yet. Never say never. But understand the game that's being played. There's a reason why people play in the ordinals, but why they play in the ordinals? They made the money in the Bitcoin first. They know what's what. Now they want to trick you over there, finesse you, double their money, then bring the money back in. It's the same thing. That's the gold concept. We're no longer into the, hey, find the right move, do this, do that, because the retail investor, kudos to you, us, they moved up. They got educated. Like, oh, we know how the game works. We know liquidity. We know market makers. We know spoofing. We see what happened with GameStop.
Yep, I was just
what happened. Exactly. We see all this shit. We learn all that. So we went from checkers and getting played to like chess masters. We see all the plays. We're not going to fall for the VC bullshit.
Welcome to the information age where the playing field has been leveled.
Exactly. But now I want you to think like a gold champion. Like even right now, and I want you to like, okay, cool, you're in a bear market. What can you do besides complaining? Like, hey, add value, look for new gems, work harder, generate more money. I'm sitting here. Obviously I'm going back home, Miami, and I travel. But like, it got to a point. Even me, I was like, all right, cool. I travel a lot. Party is full. Let's find something else to do. It's the bear market. Prices are low. What can I do? I went to, we're here in Louisiana. We're building houses. This is awesome. I'm having my best friend doing something new. Building houses, making money in the blockchain, generating extra money, right? We're doing net profit like $50,000, $60,000 a month in the real world when nobody cares because everybody's like, hey, because you can do multiple things. Because when prices are low, this is the time when you want to take advantage, tackle things so that you don't, again, fall behind. One more time, some of us made money before crypto. We got the mindset. It wasn't just like, that's why when the weekend gets washed out or the non-believer, some of them has a lot of money, but they never really understood how to make money. So this is why they're always in a scarcity mindset. They're like, oh, how can I salvage this? How can I just squeeze? Instead of be like, how can I expand? When people contract, you want to expand. So that's the biggest
part of expanding right here is getting your ETH and pulse bags in order if you haven't already, because you give this another 8 months.
I'm buying that fucking tip.
You like take every advantage you have here where the opportunity is ripe.
Automatic every month. Why? Because again, my HEX bag is already set. So now it's like, hey, new fresh capital, by the way. And then another thing is like, oh, prices are low. I don't want to sell crypto. Boom, generate more money, which is what I do. It covers the lifestyle. Still want to travel. Everything's cool. Bring the place I've never been. Onboarding is great. But everybody knows onboarding works a little less when prices are low. What's the next best thing? Buy the fucking dip. You can re-onboard yourself. You double down on what you believe and what you said you're going to do. And that's literally what is the key. And that's what's going to separate you, because this is what we were saying about in the beginning of the conversation, where it reminds me literally 2020, 2021, right around when Uniswap launched and we got the coin, whatever. I was busting my ass, investing $10K a month, just buying, staking, just laddering up because I knew what was about to happen. Everything that we just talked about is mad alpha, but guess what? It doesn't mean shit, respectfully, if you don't take action. Because what are you going to do? You know this, okay, what's going to happen? You got this nice runway. We said 3 or 6 months, possibly a little bit longer, depending on how interest rate play the game. But everybody knows elections coming. They're going to hit the printer. Global liquidity is increasing. China is printing money. They got to stimulate the economy. Europe is definitely printing money. So it's like the Federal Reserve is dying to lower the rate. They just don't do it yet because they got to protect the system. Because remember, they don't care about me and you. They care about protecting the system first. Then when the system is safe, make no mistake about it, they're going to turn on the printer. All-time high in the stock market. Great. NVIDIA killing it. Why is that important? Because the more money they make, paper money, they're going to rotate some of that into ETF, into crypto. So because now it's combined, you want stock market to do well. Stock market do well, gold do well to some degree. Some of that money gets trickled down into crypto, especially the AI phase, which is what fueling NVIDIA, which then tells us people are investing in the future. Because if they didn't, they wouldn't be buying all those chips and all those GPUs, and NVIDIA wouldn't be flying the way it's flying. So that signaled the market that people are investing in the future. They're buying, they're doing, the orders are coming in. They're buying other cryptos. Data centers are coming left and right. That tells you hash rate is going up. Money is being spent in the right position for the deflationary event. But if you're not in position now, the next best thing is to, what are you going to do to be in position? Instead of just complaining or sitting and doing nothing, because then when the surge happens, it happens so fast.
We saw a taste of it in January. I mean, like literally one little news event can change the direction of Pulse Chain easily because there's only 80 million bucks on the bridge.
Yeah.
You double that and you just 4x the price of every single thing on Pulse
The
Chain.
HEX liquid also is so tiny compared to what we should have. It's insane. It's like, what?
All right, guys. Well, we've been going. We're coming up on 2 hours. I think that was a pretty good stream.
Freaking awesome. Hey, ask the chat if they have any questions.
Yeah. Yeah. If you guys have any anything that you need addressed here in the last 5 or so minutes that we're on here, I'll just pull up
anybody in the chat, if you have any questions, shoot. So again, the moral of the story today: be a Go player. Okay,
there's opportunity everywhere, guys.
Exactly.
Like, don't cry. Like I think most of the people here understand. Most people listening, they understand that that crypto is going to moon. Like BTC and ETH. BTC already showed its hand. ETH's now ready to copy up, and you can basically pick an altcoin ecosystem. And I'm not going to say it has to be Pulse Chain, although I prefer that, but that doesn't mean that you have to prefer that. I mean,
exactly.
Solana's been doing good. I mean, although why don't we invest on the merits of decentralization and 100% uptime? That's just my thing. And I did say that live in front of 3,700 people the other day on Mario Nawfal's space.
Nice.
I went hard. I went hard, Karim. I went hard against this. It was a meme coin thing, and I'm talking about utility and shit.
I know, right? You see, that's the beauty with you, because you understand that. That's the essence of what I said, the Go player. It's like the goal is not to be confrontational. To this day, even a lot of people tell me like, "Oh, Karim, I'm not a maxi. I love what I love," but I'm like, I always tell people, "Bro, do what you want to do."
Karim, I literally gave them the playbook for how to make a coin on Pulse Chain or on any chain. Do a million X. I gave them the playbook, and they were fighting me. And then I'm like, at the end, I'm like, so yeah, guys, you could literally do this yourself.
Literally, as long as you do what you want to do, you understand where your money is going, and you're getting something that has product market fit. Everything goes. You can dabble in different things, but you got to make sure it follows like an essence, a roadmap, or like something that you can look back and be like, you know what? Okay, I have a thesis. I have a system. Because if not, you know better than just a gambler. At that point, bro, why do blockchain? Yo, call me up. Let's go to the casino. I mean, at this point, might as well just go red or black. You know what I mean? If there's no like thesis behind what you're doing, that's bad. But again, look at what you can do for yourself in the long run. Look at different avenues and stay the course. Believe in yourself. Double down. When people contract, you want to expand. That's the biggest lesson. It is one takeaway. Besides what I always say, stay big and chill. But it's literally expand when they contract. This is the number one thing why I love HEX so much, because it literally frees my time. I can't stress that enough. That's why to me, it will always be my number one, no matter what. It has nothing to do. I'm not a maxi, whatever, because I truly understand. I internalize. Again, you listen, you understand, you internalize what it can do for me. It literally freed me. I became financially free. I can travel the world whenever I want. But more importantly, if I'm a little bored, which I was at some point, traveling, party, cool. Hey, because it frees me so much, I can go try something new. I can go build something. I can go try a new career if I want to, whatever it is, because the money is being made passively, right? Warren Buffett, I made the move already. It's doing the cooking. I can step away from the stove. I can be a chef somewhere else. We could
spend a whole another hour just talking about that, getting ready for that.
That value is key. Look at Axis. Look at Crispy. They were able to build websites, new community, teach people, do all sorts of stuff. They can do all of that, and the stake's still running. That's the key. One of those like, oh man, 3 a.m. wake up, yo, where's my alarm? Oh shit, did you see the price? Oh, like no. Some of those meme coin, yeah, cool, get your money, but you're out there, you're stressed. You don't know. You make money, but like, should I cash out? Should I wait? You know what I mean? You know better than a gambler. It is what it is. I don't hate on it. It's just understand what it is. So to me, that freedom is literally what makes HEX superior. And again, one more time, you never heard about 100% uptime being compromised. You never heard about like, oh, the system is down or hacked or whatever, to the point where you can literally don't have it on the computer. Whether you have internet or not, like that's solid since day one. Let that sink in. When we know how many rug pulls and whatever, it's like
stake HEX.
That's it.
That's my tagline. Steak egg. Listen, nobody has to agree with me. I'm going to collect as much HEX as possible. I'm going to go try to compete with the dream.
Bang, bang.
I'm going to go try to compete and be like, I want more HEX.
Exactly. Every day, baby. Every day. Now this is gonna be so glorious, man. It's awesome. A little caveat that I can share a little bit, which is cool, is that I can't wait when Richard comes back on stream. It's gonna be so much fun. I've had the pleasure and honor to hang out with his dad. It was awesome. I can tell where his energy is it come from, and trust me. And I don't want to make no expectation, whatever, but like when he comes back, man, oh my God, we're gonna be checking some boxes. I can't wait. This is gonna be sweeter than even the money. It's not even the money. I just can't wait. I just can't wait.
Yeah.
The movie part 2 is gonna be crazy. Right? It's gonna be Axis. I am telling you, no bullshit.
Hey,
when I say my boy's on a mission,
we didn't need to see him come back and shit, but like, I believe that when he does come back on camera, it's going to be pretty. The
story is going to be insane.
I mean, I'll just at that point,
like talking with his dad. Just
this could be a year from now, and it's like the state of the game will be completely different. You know what I mean? Like we'll be looking at that, like we'll just be sitting there watching the movie happen.
Bro, people are gonna share a tear. I'm probably gonna share a tear or two. I ain't gonna lie. It's gonna be, but because I want to, but I just can't wait. It's coming. It's just, hey, we're just gonna put it in your room. We're gonna keep.
Hey, before we let you guys go, go support Gary Woods, KG, and Brandon Davis on the Minect app. If you do a $10 question and you say Axis sent me, you get $20 of Axis airdrop to your wallet. So that sounds like a pretty good deal to me. So I would go check that out. I'd go to Minect, free money, shit. And I would I'd go and ask him a question. I think Gary took the lead. Hey, make sure that if you are sending questions into those guys, that you go back and you read it or check your app and then go back in and click it and like read the app. They read the question that he sends back. Otherwise, or the answer. Otherwise, it doesn't count for the contest. So he told me to tell everyone that. So hey, if you want to get some Axis coins, then maybe you want to dive in on that opportunity. And Crispy, any final words here before we take off?
No, I already said my piece, man.
Okay.
Go.
Well, we got
shout out to everybody in the chat. Thanks for being here. Appreciate you all. You guys are awesome. Thanks for the love. And I think it's Crypto Luckbox that said it best. Finding great stream, but Mr. Cheens that says, I need to find some extra income generating stream. That's very, very powerful right there. Again, start thinking like go, don't limit yourself. It's great. We know what crypto is going to do. We have bags. It's cool, but don't just wait for the pump. In the meantime, because HEX freed you, give you that extra time, trying to find something else that you can do or other ways to income generate so you can buy this dip. So
to this question here, I will actually not be in the Amsterdam meetup, unfortunately. I wish I was. I'd love to hang with him and ask James, this is the Atropa dev, what he would do if he had the solid index supply. I would love to know what he would do with it. So if anyone wants to go ask him that question. And
Axis, thanks to you. It was a great stream. Thanks for reaching out. You know what I mean? That's great. Hey, listen, I'm getting this good vibe from 2022 2020 vibe. So
it feels like
more often.
It feels like that ETH money's coming.
It's coming.
Soon enough.
It's coming.
All right, guys. Thank you so much. We'll see you guys on the next one. Appreciate everybody for being here. Peace.
Peace.
Out.